Always lock in profit as a day trader. The market doesn't care about how much time and energy you've invested. It's your responsibility to always lock in profit. And this is a daily model that I live by and something that has helped me become very profitable in trading, especially knowing when the opportunity arises. What's up? If you're new here, my name is Kenya. I am one of the owners, educators, and traders at BK Trading Academy. We help new and struggling traders learn how to trade with structure and guidance so that you start the right way, you have a breakthrough, and you learn how to trade confidently. In this video, I'm going to show you my technique that I use daily on how I constantly lock in profit. This is more from a swing trading perspective. I'm actually a scalper by nature, but I swing trade more than I scalp now, and I like to scalp in between. When I am swing trading, my style is that I love to always pay myself. I want to be constantly locking in profit, and that's just my own technique. You may be a swing trader or a day trader where you prefer to just sit in the trade, let it do its thing, you take your eyes off of it, and later you return to see if it hit your target or not. I started to notice through journaling thousands of trades over the years that I had a lot of opportunity and I was missing out on daily pay. And that is, the market would often swing up and down. It's going to move up and down before it initially takes off. And I would be able to get in with a few positions, pay myself, take some cash off the table, and then re-enter. And then eventually the market, I learned, would take off really after probably that third or fourth movement. So I'm going to show you an example with Euro JPY right now and show you exactly what I did today. And hopefully this can just open up another idea to help you become more profitable in your trading. Let's hop in.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
So before we delve into Euro JPY, let's talk about why you want to always be taking profit. One reason why is you can't always expect the market to move in your favor. A trend reversal could happen at the blink of an eye, but by regularly taking profits, scaling out, hitting your predetermined target, or even partial profits, you're always protecting your gains. But let's say if you've been sitting in a trade for 4 or 5 days, all of a sudden you have a trend reversal, you've made no money in that trade, and now the market is moving in the opposite direction. What do you do? So hopefully you haven't used up all of your leverage or your risk and you still can play defense and maybe come in at a better entry. But again, you've been sitting in that trade for days making no money. So this is just something that I kind of realized over the years, and I started to perfect my technique and I started making a lot of money doing pullback trading. So let's just hop into Euro JPY. I'm going to break this down and show you exactly what I mean by this. We're going to start on the higher time frame. I'm in a long right now on this trade and I've taken multiple profits on it. I've made a lot of money on it already just within the past 2 days, and I'm going to show you exactly how. So let's look at it step by step. So we're going to go out to the monthly time frame. So we're going to look at the monthly, and one of the things we know on this monthly time frame is that price is in a nice healthy uptrend. And if you notice right now, price is also at a monthly reversal zone. So if I simply draw this zone right here, you'll see that price is at a monthly reversal zone. So look at how much the price has been coming down. Don't you think that sellers are most likely going to lose some steam right within that area? I think so. So now I'm going to drill down to the weekly, and now you can see on the weekly that definitely buyers are stepping in, and you can also see that we had a nice little impulse to the downside after our uptrend. We had a somewhat of a correction or a bearish flag formation, and then more drop to the downside, and look, price has landed in a weekly reversal zone. So because I know that, I am definitely interested in buying this area, because after this bearish movement, I know that a correction is coming on the lower time frame. So I'm going to continue to drill down. This is the level that I'm trading from. Now you can see on the daily, we also have a double bottom, and look how much we have rejected this area. So we rejected back in August, early August, and now here we are again, and this is in September, and this is exactly where buyers are coming in. So I'm pretty confident that staying focused on this weekly support level, that I can get probably at least 100 to 200 pips after this market has dropped a couple hundred pips. So look here, in the past 2 weeks, Euro JPY broke to the downside 758 pips. That is insane. So don't you think a correction is coming? Absolutely. So I can go down to the intraday time frame, such as the 4-hour, and this is what we kind of saw. So I was able to get an entry somewhere right about up here in this wick rejective area, and the price broke lower. Now I expected that this could happen, because if you go to the weekly time frame, you have to study the reversal point. And this is why I don't like tight stop losses unless I feel that the trade will possibly go another way. Then I will use a more conservative stop. But in in deep supply and demand zones, I do not like using tight stops. So I gave the trade some room to breathe, and I knew that I was going to execute more long opportunity if the price did dip a little bit further. So now going down to the 4 hour, you can see we have a double bottom formation. Price did decline to 155.16. In the interim of this happening, price did something like this. It actually went up a little bit. You're not going to see this on the 4 hour, but it went up a little bit and then it came down and it dropped. I added more buy here. And then as price started to go up, I took profit off the table right here. It dipped just a little bit and then continued to rise. And now if I go down to, for example, the 1 hour, you're going to see more of that up and down movement. So in the midst of this, let's say, for example, if I'm buying here, but let's say I'm in a swing trade overall, because I'm thinking that price can get back at least to about 157.40, right? And from this wick rejective area to 157.40, that's about 225 pips. That's a nice little swing trade, and I'm confident it's going to get there. Okay, if I'm wrong, at least I've made some money while I'm waiting for my overall targets to hit. So I keep my lot sizes really small. I spread out my stop loss. I may go in right here with about 3 entries. As price moves in my favor, I will take one of those positions off the table. If the price pulls back to my initial entry area or even dips lower between 30 to 50 pips, I will add another position. Now, what gives me confidence to do this? Because some people might say, well, if you're already in drawdown, why would you keep adding positions, right? One thing that I know is that the market is deeply oversold, and I can see that from various indicators and confirmation. Number one, I can look at this price action and I can see how deeply oversold it is. The market has dropped over 750 pips in the last 2 weeks. I can also look at other confluences like divergence. I can look at, for example, the RSI. The RSI is at the 20 level, and that is a good indication. So I'm definitely going to be looking at this as an opportunity. But what I want you to know is that price is just not going to do this. It's just not going to shoot up. It's not going to do that, right? So when you're sitting in swing trades, you're not going to know this until you start to journal your trades and you get a really good history of your trades. You need a lot of trades to be able to see trends and patterns that happen and spot opportunities that are going in your favor. So the more you trade, the more you're going to see this. I started seeing when I documented trades that, wow, I'm leaving a lot of money on the table. I'm sitting in this swing trade for days, but while I'm sitting in this swing trade, the market will either retest my entry. So let's say even here, let's look at this 4 hour. Look here. This is where the market formed support previously. Look here how price came here. Buyer stepped in. Now let's see how much the market went up. About 59 pips, 60 pips. And then look, what did it do? It came back down. So I would have taken off some profit, especially if I know that this is a reversal area and it's been tested multiple times. But how do you know when to take off profit? Okay. You want to take off profit. Number one, I don't know if price is going to take off in this zone. I know that it's taken off here because look at the volume of those candles. But initially, it's not just going to take right off. So what I've learned and by studying my journal is that initially the market may move about at least 50 pips in my favor. So between 30, 50 pips, I'm usually scalping in that time, or I'm taking some profits off the table during like an intraday opportunity. And then what does it do? It comes back to my initial entry, right? Here it is. It comes back to my initial entry. So I place a re-entry right along that area where my initial area is. And I also plan that if the price does dip lower into the reversal area, I know exactly where I'm going to add more long opportunity before it even happens. If I know that this market has already declined over 760 pips in 2 weeks, you better believe that this market is going to turn around. It's just a matter of time. And you will start to gain that confidence after you've traded for a while and have been able to study a lot of your trade outcomes. Okay, as of today, September 16th, the market has already gone up 124 pips, and I did get in from this bottom. So I still have positions running, but I've taken profit off the table here. I've taken some profit off the table here. And the reason being is because I'm taking profit at these structure levels: resistance, previous support, resistance, resistance, previous support. And if the market does come back, okay, usually I will know exactly where I want to re-enter. So for example, I don't just keep entering re-entries. I will probably re-enter about maybe 2 times, because after 2 or 3 times, the market will eventually take off. But as you can see, volume is building. So while I'm taking profits off the table, I still have, for example, let's say if I entered here, my initial entry, well, if I get in down here, I'm going to close this position, this first position, I'm going to close this. Once it's in profit, I'm going to leave these better positions running, and then I'm going to be taking profit as the market moves in my favor. And then all of a sudden, if I know that this is still in a correction, so let's go to the daily, for example, if I know that this is still in a correction and I'm expecting for the market to move upward, Okay, if the market comes back to retest this wick area anywhere near it, I'm going to enter again. If you see that the market has not jumped a couple hundred pips, you know that it's only taken off just a little bit. The RSI is still in the oversold territory. You know that your opportunity is still coming. It just hasn't happened yet. So that is how I take advantage of by constantly paying myself. Hopefully that concept is clear to you and it makes sense. What I'd encourage you to do is simply watch your opportunities in your chart when you are in swing trades or in day trades and look for a similar opportunity. Just play this video over and over again and then look at maybe one of the pairs you trade regularly and spot what I'm talking about. You're going to see it happen. And I'm sure a lot of you have probably seen it happen over and over again. Maybe you're just not aware of this technique. And I don't even know if it's something you'd be interested in, but I will tell you that it makes me really good money, especially while I'm waiting for the overall volatility to take place on a pair that I might be trading. So if you are a new or struggling trader, I encourage you to check out the description of this video, check out the academy and all that we offer. We have a phenomenal community, everything you need. It's a completely handheld program and will help you succeed, especially when it comes to risk management and everything you need to be successful as a trader. So hope you enjoyed this video. Don't forget to smash that like button. Make sure you subscribe, turn on that notification bell so you don't miss our next upload, and I will see you in the next video. Thanks for watching.
Yeah, I know I got problems, and I don't know where to go. I don't wanna put the blame on you.